What's up, everybody? It's May 28th. This is the weekly Q&A. It's right before the Memorial Day weekend, so try to keep this a little short. Not a lot of questions this week. I answered a lot of them in the weekly questions chat before, so they didn't even make it to the video. But promised Double D he would be the first one I answered, and his whole question this week was about the NASDAQ swing trade last week, and he was wondering what the difference was in two different scenarios where I said there was no support somewhere and there was support somewhere else. Now, I went back and watched, and for everybody's reference, it's last week's weekly Q&A video at 8 minutes and 5 seconds, where I say there was no support. I wasn't meaning there was no support, and I'll show you what I mean in a second. And I just worded it differently for the moment at 21 minutes and 30 seconds in the video where I'm talking about there being a failure long after we hit this big daily support that I'll go over in just a second. So what I was going through during that video was I was talking about these continuation long levels. So just for reference, we will draw our legs. Now, the reason I started at that low is because this low broke this support. So I know this is the beginning of leg 1 up to leg 2. This is the start of leg 2 down. You don't know this at the time. This is fully fleshed out now, so it's much easier to see. And this would be leg 3 because we went above this high. So these are our 3 legs, and we know where we get our levels from for continuation long would be resistance in leg 1 that acted as support. So we have this 12,675 level, then we also had this high right here, and in that video last week I was discussing why I did not consider these levels to be our lowest untested. And the reason for that being is I considered this area right here in this circle having tested these levels specifically. So we came down and tested this 12,675 1, 2, 3 times, and then right before we took off for this move higher, we used this 12,790 as our base before we moved out to new highs. So in that video, if you go back and watch it, I said I was explaining why this high was our lowest untested continuation long. And the reason was we had resistance right here in leg 1, a high in leg 1 up. It acted as support not only inside leg 1, but also in this leg 2 down. And then here is where it acts as resistance and support back and forth. So here's where there was probably some confusion, because I said acted as resistance, support, resistance, and then I said no support. What I meant by that was it did not act as support before we made this move to the highs. The last thing it did was act as resistance. So this is one of those things where maybe it looks tested, but it's not, because this level 12,960 wasn't used. It's not actually 12,960, it's 59.75. Anyway, that's me with my OCD. So it was not actually used as support in this move up, right? It was used as support like right here, but that's it. It was then used as resistance again. So it's kind of like one of these things where we came up to the level and just ignore all the price action above, but we used it, went above it, came back below it, used it as resistance again, resistance. So it's still acting. What's happening here is it's acting as a failure short, which it would have been because we broke this low over here. So it continued to act as a failure short right in this area. Trying to highlight things. Somebody asked me to slow down a little bit with my cursor today, and I totally get that. So it acted as resistance in here like it should be, because at this point it is just a failure short. And then it took off, meaning it acted as resistance, support, support, resistance, and now it should be support again. So that was where the confusion came in. I said no support, just meaning it did not act as support right here, meaning it would be valid to act as support on the right side. So hopefully that clears up the confusion. I think it should, because I think it was just my phrasing that made it confusing. The scenarios were exactly the same at 8 minutes and 5 seconds and 21 minutes and 30 seconds. So hopefully that answered your question. We'll go on to the next question now. It was from Super J. He had a question about some of these charts, and I'm going to pull his charts in here. He posted them publicly, so they are fair game. And they're great charts. I love Super J's charts. He does a good job. So he was asking basically if we get above this purple line, which is the high of this leg 3 down, because he has his qualifiers marked, which means we would have leg 1 down, leg 2 up, leg 3 down. So what happens when we gain a leg 3? Now, number one, gaining a leg 3 is significant. So that's like the biggest flashing red sign: reversal, reversal, reversal. So you can look two different places. His green line here, he's asking if that's active for purple, if purple was broken. Now, I would say no. What's actually active is this low here, because this would have been your failure long, and it was tested right here, which is why you didn't get a reaction on this move down to new lows. So this is what we call a 3-leg flip, and I've discussed it in the chat room many times, where once you gain a third leg or lose a third leg, your prior levels become fresh again. Now, where we get confused is, let me actually see if I can draw on this, or I'll just pull out the notepad here. So here's the general pattern that he's asking about. We create our 3 legs, right? And then we break our third leg again. So this would have been a failure long right here. This is the low of our 3 legs. Now, if we break support to the left, the low of this 3 leg would be our lowest untested. Once we gain the high of this, if things are untested and if this is untested and things fit support and resistance, basically, this low here would become a valid level again. Now, the way you select these levels is which one is lowest untested. In Super J's example here, I can actually pull it up on the NASDAQ chart. Let's see. I think this is where he was talking about right here. Let me look at it one more time. It's 13,400. Yeah, this was the area that his chart was referencing. Same thing. So this is the level I was showing on this diagram, this red level right here. And it's kind of the same thing. It's kind of the same thing as what we just discussed in the NASDAQ. If you're being really microscopic about it, support right here, resistance, support, axis support, and then axis resistance right before it goes up. So you could call this an untested level, but it's questionable, especially on a lower time frame. This is You could call it tested, you could call it untested. Either way, what ends up happening is all you end up doing is going to the highest untested and then breaking down. And I would have called, since we broke support to the left, this would have been our lowest untested level, which is why I get that you see these big moves and you're wondering how you can get on board. The thing is, sometimes these moves happen off of second touches, or they happen off of levels that are not your lowest untested, and that's okay. You can't worry about missing those trades. You just have to move on. So this is not a trade I probably would have taken. What ends up happening here is you lose last, or this is your last loss here in this move down. This is the move that broke it. So once we get above this high, we have failed to lose here. This is your level. It doesn't quite get to you here. It actually does there. But right here, this is one of those things where I say, is it tested or not at this point? Well, it came down and tested last lost, which is your failure long, because we failed to lose this level here. So here's your failure long. This is your lowest untested. It almost got there, and then it did what it's supposed to do. And what it's supposed to do is go to the highest untested level of the leg you're retracing, which was this 13,453 half. So here it has done what it's supposed to do, right here, this move up. So while this is technically a fresh first touch because it did not get tested, that's why you get this liquidity here, this little bounce from 26 to 38, which is nothing to sneeze at. It's over $200 a contract, but you can't expect it to do what it was supposed to do because it's already done it. So it's either going to go to new highs from here or it's going to fail. What ends up happening is we go to the actual lowest untested level, which was this one right here that wasn't marked on Super J's chart. And then after you hit that, you have this three-leg structure here. We broke support, we broke resistance, and then we extended our third leg down. And then our failure long that we would have, if we tried to buy here, we would have been stopped out on, turns into a valid failure short on first touch here. Because this, from this low, this is your next target, and you have to get above this high to continue. So here's your continuation short. This is what would fail to lose. You would gain last lost by getting above this high. So this is basically your target and or place to get short. So hopefully that answers your question on that chart. This I wouldn't have taken. Hopefully this gives you a little clarity compared to your chart where I would have marked this level anyway. And then on your second chart, let's go back and look at that. Your second chart was basically the same idea, but slightly different. So you're asking about this green level. Now in this one you marked it correctly, sort of. I'll just assume we'll say this white line is a valid qualifier. Technically it didn't break there, so it's not. Really your level that broke support is up here. Still, this is valid 3 legs. So because this broke support right here, right in this area. So it's valid 3 legs. We've got above purple. Question is, does it reactivate? Does it reactivate the green line? Yes, but it's tested. So yes, this worked. It's a second test. We're not going to take it because this is recency bias. You're collecting examples of these things, but you're ignoring all of the times that a second test failed. Went right through, didn't stop, didn't collect $200, just didn't do anything. It just failed. You see when a second touch rejects because you're like, man, I thought that level was tested. I should have bought it, or I should have shorted it. No, it's okay. You're letting your bias take over at that point. You're seeing what you want to see. So just remember, your eyes are glazing over all of the failures that would happen if you took this trade. So what? It's tested. So what? It bounced. It's fine. It's not valid in our system. Move on. Skipping this trade saves you a lot more money than it makes you. A lot more. So we'll move on from that question. Hopefully that answered your question, Super J. Keep up the good work. That's actually an advanced technique that you've noticed. Just the 2 examples you gave me were tested, so don't worry about it too much. Those are just situations that suck. All right, so then we had a question from Remster. Say you have an up-down move, and your left levels and qualifiers are from 1, 2, 3 years ago. Would you still extend those lines from the left, or do you treat the current moves as all-time high situations? This is actually something we discussed in the chat room today, and we discussed it with AMC. So let me pull up AMC really quick. So the scalp I took today was on a 5-minute, let me just pull up a 5-minute chart. So the scalp I took today was this 2850 level. 2850 to 3128, took profit, moved stop, new lows, fine. No big deal. Not expecting it to go up forever. It actually made new all-time highs, which I told you guys not to ask about. Satisfied trend. Satisfied trend, failed to gain. That's big sign for reversal, but I don't care. I'm just going for the money. So this dotted line is actually my qualifier from way back over here, right in this circled area. This is the daily chart, so this little swing high, continue down to new lows, was the move that we gained in our current leg up. Do I prefer to see this in any trade I take? Yes. Here it is. We broke above this dotted line, which is our qualifier to the left, and we created 3 legs. We broke above it, broke support that broke above it, and then made new highs. That extends our 3rd leg, which makes this a first touch of support. So in high momentum names, I talk about the momentum scanner that I use, which is a mix of Christian Kulamagi and Pradeep, kind of looking at biggest movers over the last month or 2. I sort them by percent change. I go through, I look for my setups, very particular about what I look for. But with these high momentum stocks, I don't always need to see this qualifier to the left. 95% of the time it's there. But if something is high momentum and it is creating a valid leg structure in this high volume environment, and what I mean by valid leg structure is just exhibiting this tendency of resistance, break to new highs, fail, break support, act as resistance again, and then go to new highs. That right there, under high volume situations, creates your resistance, support, resistance scenario. So it'll still function the same. Now, for the most part, it works exactly the same. There have been times where I didn't really care about the qualifier and I got blown out. Like just the trade just got blown right through, got stopped out pretty quick. That's fine. There's other times where it works. In these high momentum trades, you're banking on the current influx of volume. You're banking on all the current participants seeing, hey, that's previous support or previous resistance. They don't see it the same way we do, so they can't be as precise most of the time, but they get the idea. Hey, there was resistance there the day before. Now there's probably going to be buyers there, so that's where you get these little bounces from. That's fine. This one's technically correct. They don't always have to be. It just depends on momentum. And or if it's at all-time highs or all-time lows, you can't have context to the left. So when an index or something is just grinding at all-time highs, you basically just draw out your three legs. There's no way for you to have qualifiers to the left as you make new highs. So you just go with it. So this is kind of the same scenario. Momentum, it's moving up, it's moving up, it's moving up. Does that mean I ignore my levels to the left? No. I've traded off levels from 20 years ago. They weren't always as precise, but they still, everybody else can see the same charts we see. So they look back and they go, hey, there was prior resistance here. Probably a good place to take some off. It's just how it is. When it's high momentum, I want to see it, but I don't just always automatically treat it like all-time highs. It really depends on how far left you have to look. In the case of AMC, it's really not that big a deal. I mean, you were looking back at 2016, 2017. I mean, everybody else, as AMC drove up into the 30s, they're looking in the same area you are. So it's not a big deal. Try to find your qualifiers. If you can't, you're playing with fire, but in high momentum situations, sometimes the fire is worth it. So let's see if we have any other questions. Answered most of these questions in the chat. I just left them up for you guys to be able to read them. Somebody asked about a support and resistance like activity to practice. There's a pinned message in the chat room where I go over this, and you really can just go on any time frame. Let's clear this out. Clear drawing set. And in here, it's not a big deal just to pull up a really small time frame and just start drawing resistance and support. Stuff that acted as resistance and then support, and then resistance and then support, and see what happens. So right now, like right here, you've got support, resistance, support, resistance. So draw this line. My eyes are naturally going to work to do this pretty quickly, but resistance, support, support, axis support again, support, axis support again. Same thing, resistance, 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 support, support, support. And this is just an exercise. Let me mark highs and up legs, lows and down legs. Let me see what happens. Let me see which ones work the best. Over and over and over again. Like you can even get down in these really small, like little minutia details and say, hey, this was support. This was support right here, and then it acted as resistance, and then it acted as resistance again, and really we have resistance all through here, and then we acted as support here, then we acted as support here, like, so this could be a level, right? Now, of course, knowing what you know, this is tested, but that's valid. Then you've got, like, look up here, you've got support, support, resistance, 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 resistance. So that's a valid, like, draw it in there, draw it however you want. Support, resistance, 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 support. That's what matters. You're just practicing drawing things because you're trying to train your eyes to see these levels. It doesn't matter when you're practicing if it's valid. It doesn't matter if it is, if the legs fit. It doesn't matter. Just make sure you're drawing support from down legs, and who cares about legs? Just make sure that the stock is moving down. Draw your support, and when it's moving up, draw your resistance, and try to make sure it fits. Like here we have, over here on the left, we've got resistance, support, support, a little bit of resistance, axis support again. Clearly an important level. And this will start training your eyes to see this stuff. This is not about learning the rules. This is not about making sure your legs are correct. This is what you need to see when you look at a chart. So you know, hey, here are my legs. Here are my valid levels. This fits support and resistance. It's not just some random high and random low. That's how it makes it easier for you to where picking the level no longer becomes something you have to think about. You just do it. All you're worried about is whether or not legs are valid at that point. So, hope you guys have a great Memorial Day weekend. Take some time off, then get back to studying. Some of you guys are doing great. Some of you guys need to buckle down a little bit. Um, if you've got any questions, always reach out. Always ask in the chat. I ask you guys not to DM me questions. And it's not because I don't want to talk to you guys. It's because if you DM me trading questions, I end up answering the same question over and over and over again. Versus if you ask it in the chat room, everybody can benefit from your answer. There's no shame in our chat room. If you don't know something, ask. It's fine. All I ask is that you pay attention to what other people ask too. So I'm not answering the same questions over again. So anytime you see a flurry of charts and questions and me asking questions back and answering questions, read that stuff. Don't just worry about what you are worried about at the moment, because whatever somebody else is asking, you've either gone through it and you can help, or you haven't gotten there yet and it's going to help you get past that barrier once you get there. So that's how we work together. That's how we make this easier for everybody. Makes it easier on me to help you guys, makes it easier for you guys to help each other, and in the end, the whole construct of working together accelerates everybody's learning. So that's the end goal. So you guys have a great weekend, and I will catch you on Tuesday.